Well, the U.S.-China trade war is back now in full force, and I can't say that I'm shocked considering that all this Wu-flu stuff has been going on. Trump has a good excuse to be mad at the Chinese again. Now, of course, if you remember, we had for over a year, maybe 2 years, a massive stock market rally, completely predicated on trade talk optimism, on this idea that the trade war was going to end and that things were going to improve, and that Trump was going to make the best deal, the greatest deal that you've ever seen. And then at the end of it, all we got was just phase one, which turned out to be nothing. And now all of that's completely, out the window, and we're back into not only full trade war mode, but we're back to additional measures. And so, considering that the stock market was supposedly, if you listen to the efficient markets hypothesis people, the market over that whole period was pricing in this great trade deal that was going to come. And so, when the trade deal came, the price shouldn't have shot up of stocks because that would have already been priced in. Well, considering that trade deal never came, and now we have a worse trade war and a massive depression, you would think that the EMH people would be, pointing out that, hey, stocks should give up all of those gains and more. Especially since we see that this new side of the trade war, which is going on with the Commerce Department now targeting Huawei specifically, and essentially banning companies from working with Huawei, which, if you're in that field, it's not like you make cell phones. You don't make every part in your factory and assemble it. It's not like a gun where you can, there's just these few metal parts that you have to machine and then you put them together. No, a piece of electronics is very complicated, and there's all these different chips and things in them, and semiconductors. And so that's what the Commerce Department decided to target. They realized that Huawei purchases a lot of semiconductors from American companies. These are chips, in other words. And they decided just to overnight say, no, that's not allowed. You have 3 months, 90 days, to find new suppliers, Huawei, or else you're screwed. Keep in mind, Huawei is the second largest, I believe, cell phone manufacturer in the world. I guess number one would be Samsung, maybe? I don't think it's Apple. So this is obviously a massive shot across the bow at China, and one which is going to negatively impact the American tech sector in particular, because Huawei buys a lot of chips. So if you take away Huawei, all of a sudden these chip makers need to find new buyers for all these chips that they were going to sell to Huawei. Either that, or the market's going to have to shrink, meaning that chip makers are going to have to go out of business. And that is going to, at least in stocks, it's going to bring down the NASDAQ, which I think we're already seeing this morning, since that is more of a tech-focused exchange. That's kind of, I don't know if that was originally how the NASDAQ was set up, but versus the New York Stock Exchange, you get a lot more of your tech stocks on NASDAQ. And in doing so, it's going to bring down tech overall, at least as far as the selling goes, psychologically, because these are, even though the chip makers have not been leading this rally on the way up, they're sort of peripheral to these other tech companies. Namely Apple, which is now being targeted by the Chinese government. You see, China is not going to let the U.S. just sort of one-sidedly impose more restrictions on them. Now the Chinese are trying to go after American companies. They're going after Cisco, big tech firm. They're going after Apple, of course, big tech firm leading the stock market rally. And they're going after Boeing. And so these are just the companies that they've individually named so far. I mean, they said they have a whole list of unreliable entities that they're going to target now, and they're going to be targeting their activities inside of China, restricting these companies. And of course, since China's risen so much economically over the past 40 years, they've become a big market for a lot of these folks. They want to sell things in China to Chinese people. And so if they lose access to Chinese markets, that's going to be a big blow to their revenue when we are already, like I said, going into a depression. Now back to the current, stock market rebound off of the March, 3rd lows. It was in early March The market, or at least the S&P, I'll use that as the common metric, dipped just below 2,200, but it was right at 2,200 thereabouts, and then it shot back up, tagged almost 3,000. I think they got to like 2,950. And of course, the tech stocks have been what has been leading this rally. Folks like Amazon and Apple and all that. And if you look, this has not been a very broad-based rally. It's been incredibly concentrated in these big name stocks. And so if the tech sector is now coming apart, triggered by this whole reignition of the trade war, which again, I don't know why Trump would do this unless he was not looking at the direct mechanics of the market, because he would have to know that if you're going after tech, you're going to hit all of tech. And that's going to trigger, that's going to be the excuse for the sell-off, because, we failed at 2950, okay? That was resistance, couldn't break through, and the market was pretty much poised to go down at some point. We've just been kind of lagging around here. A lot of folks have been expecting a retest, and Trump just basically gave Wall Street a great excuse to retest the lows. Now, you could say, though, that this goes hand in hand with what he's been talking about over the last couple of days on Twitter, pushing the Fed to unleash negative interest rates, saying that Powell should accept the great gift of negative interest rates so that people can borrow money without having to pay anything, and in fact getting paid by the lender. Now, as I talked about earlier, the futures market is already pricing in negative interest rates as soon as December of this year. And so, in order for that to happen, the economy needs to get worse. In other words, the stock market, since that's really what the Fed cares about, not the economy. The Fed has been, hollowing out our economy for the sake of the stock market for years. And so they don't really care about the economy itself. They care about the appearance of economic health. They care about the perceptions of consumers, because you see the consumers will not consume if they feel like things aren't going well. So they need the Fed to tell them that everything's all right. And how does the Fed do that? By fixing the price of stocks and make them always go up. And Trump feels like in order for that to be achieved, because the Trump has the same goal as the Fed here, he thinks that the Fed needs to go negative. But the Fed has not taken the plunge yet. In fact, Jerome Powell has repeatedly said, that'll never happen. Not going to do it. And he'd be wise not to do it, because it's had terrible results elsewhere in the world, namely Japan and Europe. The best you can hope for under negative interest rates is stagnation, where I guess at least you don't die, but you certainly don't get ahead. Trump, however, doesn't seem that much concerned about it, and so he wants to go full steam ahead into negative rates. Well, if the Fed will not get there on their own, then Trump just has to nudge them a bit. If saying on Twitter you need to cut rates to negative isn't good enough to push the Fed in that direction, well then, perhaps a retest of the March lows is just what the Fed needs to motivate them into making the right decision, as Trump sees it. After all, Trump was successful in bullying the Fed into cutting rates to begin with, because if you remember, back in 2018, the Fed was off in its new tightening cycle, and they were raising interest rates, which should have brought the recession way back then. And had Trump taken his medicine and explained to the American people that, hey, the Fed tightened, so we got a recession because we had a big bubble, that's the way these things work, he would have been fine, especially since we would have been well on the road to recovery by the time this election rolled around. Or at least, I'd hope we'd be on the road to recovery by then, because, there is so much debt in the system right now. There is such a massive bubble that, when it pops, which it is in the process of doing now, we really don't know how bad things can get. So I guess in closing, I think that this restart of the trade war is what ultimately will lead us down that road to negative interest rates, or at least will give us the final push in that direction. Because, of course, this whole idea that the Fed is going to just cut interest rates every time that there's any sort of economic pain, which has been their whole strategy for decades now, has been leading down this path and in this direction. And so it really was inevitable. It was a matter of when, not if, the Fed would resort to negative interest rates, because if all you know how to do is cut rates, and you feel like it's your job to make sure that there's never a recession again in our lifetimes, well then, that's all you can do. When the only tool you got is a hammer, every problem looks like a nail. So if you gained anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do subscribe, because I do upload every day and I'd hate to have you miss one. So I'll see you folks back here tomorrow.